Yeah, hello and welcome to another MCO market update on ADA Cardano. We take a look at our Elliott wave count and projections here, and as well as the important levels, risk management levels, breakout points, and so on. First of all, the main thesis here at the moment in the yellow scenario is that a larger degree fourth wave bottomed on the 3rd of February. That is a corrective pullback that might have bottomed there indeed. You can see the red line, which is the invalidation point for this scenario. And from that low, however, which formed around 51 cents, again, that's the invalidation point. The price actually started a rally, but that was a three-wave move. Wave one, we had a pullback also in three waves, which means we kept the door, or which meant we kept the door open for higher prices. The price reacted at the time to an important support level, which is now removed from the chart, but the rally happened, and it was only a three-wave move as well. So that shouldn't be a surprise, given that this could easily be the A wave of the third wave, because, again, the wave one is also a three-wave move. So as per Elliott wave rules and guidelines, in such a move, in which the wave one is a three-wave move, the third wave also has to be a three-wave pattern. And then the third wave would be an ABC structure. This would be the A wave, because really, if this is the yellow count, then this pullback, it can really only be a B wave, or it's invalidated. It's too deep for anything else. So it's not high confidence. Again, I have to mention it. Why is it not high confidence? Because whenever we deal with three-wave movements in one direction, we don't have a high probability setup. High probability setups don't come around every day, so we have to wait for them. For now, this is simply tracking. I'll show you levels. You can use those levels for trading if you want to, but really this is just chart analysis and the tracking of structures until we get a high probability setup, which, I mean, from a reward to risk point of view, this is pretty good. We just don't have any confirmation that a low is in, but I'm watching this area for a reversal. Been watching it already in the last few days. You know that, mentioned to you the 100% extension target here at 66.2 cents is an ideal move down target. It nailed it. Yeah, it landed there and started to reverse. That's what these levels often do. They create reactions. I mean, essentially markets move in waves, and markets move according to a degree, predictable patterns, even though the focus of the analysis is not so much prediction. It's more about giving you an understanding of market structure and probabilities, and what are the most probable pathways the market could take, what are the key pivots. But yeah, the 100% extension target was reached, and it is a very, very common target for such an internal C wave down in the yellow scenario in the B wave, because this pullback would be an A, B, C structure. C wave is 5 waves that filled in, and now we even have a break above a trend line. The question is this something really noteworthy? Well, I would want to see first, to really get a bit more excited about it, I need to see a break above the last high at 77.8 cents. That's the last swing high. That's Monday's high. Most charts we're tracking are still below that level, so that would be the next critical level. A break above a trend line can be an indicator, but really all that doesn't help until we get 5-wave move up above an important resistance level. And the first structural resistance level here and key level is that 77.8 cent level. From a Fibonacci resistance point of view, which is more important for Elliott wave, we've got 84.6 cents as resistance. The price needs to break above it in 5 waves. I don't really have a clear micro count here that we can track. We can speculate. We can say that, yeah, maybe this is a wave one, we get a wave two pullback, and we do this. But this is essentially what I need to see to be able to confirm we've bottomed. 5 waves up. And that's not shown yet. That's not happened yet. And this might be wave one of C, essentially. But don't get too predictive about this. These micro counts, they're not reliable. They just show you what I need to see to be able to confirm a low is in. We might not get this nice and clear 5-wave move. More important is that we break above 84.6 cents. Any more downside still possible. Also, wouldn't be a problem necessarily for the yellow scenario in which we're tracking a B wave. It would simply be seen as an extension of the B wave, as long as we hold above this swing low from the 28th of February, because this is an invalidation point for the yellow scenario, this AB structure. Below that level, however, then we could still consider the white count. It's a different structure. It's not a 5-wave move up. So these are essentially just the two scenarios, just tracking two scenarios here at the moment. The white count is a larger ABC structure where that pullback has just a little bit more space. But with those two scenarios, you have two invalidation points. The 28th of February low at around 57.5 cents for the yellow count, and the 51 cent level, 3rd of February low, around 51 cents. That's the invalidation point for the white count. And below that level, we will probably test the August lows. There's a support area below. So it's all about understanding, okay, we have here a decision area. The price must make a decision. If the decision is we go down lower, then it opens the door all the way down to 29 to 35 cents next, where the price could then still attempt another reversal, but the downside risk then will become very high. The support basically shifts. For now, we're holding above this February low, so that's an important anchor point to keep in mind. Yeah, that's it for today's ADA market analysis. If you enjoy such structured, data-driven Elliott wave insights, then like and subscribe. And for deeper analysis, learnings, and so on, check out our membership. Thanks for tuning in. See you next time. Bye-bye.